following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. Thanks to our great host starting early this morning, 8 o'clock. Just a lot of information. Let's hope we can keep doing that. Dow's up 7 at 16,973. S&P's up 90 at 1983, up 452. The comp index is up 5 at 4653. You got bonds. Very interesting, down 27 at 163.09. So we're going to be watching that real closely. We've also got gold, which was starting to pull back yesterday, pull back even more this morning. And yes, in the Dan, absolutely amazing weather we've got here. Can you believe Boston at this time on the, 9th of March, and we're going to hit 70 degrees? Wow, okay. Those are the statistics, and we'll go on. So gold is down 6. It's come back very nicely. It was down earlier. It's at 1257. I think it hit the 12. Let me just see what they did. Gold GC. This is a continuous contract, which I should hit right there. Yeah, gold is went all the way down this morning to a low of 43.60. Now it's at 1254. This is very, actually, I wanted to talk about it. I'm liable to forget to do all the other numbers. Let me finish the numbers. You've got silver up 5 cents at 15.44. You remember yesterday, silver was down, gold was holding okay. So very interesting dynamics going on there. Platinum is up 1 at 98.3. High-grade copper, oh man, up at 224, up 220. That's good for it. Let me just check. Oh, very nice. So we have a particular copper stock. It's up about 30. No, it's up about, I don't even know what it's up. 34% up on the day. It's up 5.5%. But we added something yesterday in an area that we haven't touched for I don't know how long, or maybe we've touched it once or twice. This is a nibble, but this is the first time we've begun positions in the sense that we are looking for much more of a rally. And that to me is just fascinating. And that's what I've been talking about here, is that within the context of the sector rotation, and remember I talk about a rolling recession within rotating sectors. And this is really important, and it makes April, I'll be talking a little bit more about that later in the week, but April, I think, is going to be really important in terms of levels that we need to watch in all different sectors, in all the different indices, coming into the end of March, beginning of April. Wow. Okay, so let's go on. We've got the dollar. Right now, I'll come back to this gold chart because it all relates. The dollar had a very nice rally earlier on. It's given that back, and now it's down 11 cents. It's at 97.10. And what's really interesting about this is the MACD is lower than it was, but it hasn't yet crossed negative. There are other indicators that are saying that there should be some further pullback here. Stochastic's very weak. The weekly chart is really the one that I focused on. It looked quite good just maybe 5 days ago when it was going towards the 98.58 area. And then all of a sudden you got a peak D in the Chapman wave at 98.58, and then it pulled back. I'm sorry, was it 98.58? 98.58 on the 2nd of March, and it's pulled back quite sharply from there. Quite sharply on the near term, but overall, it's still, the high was in the 100 area. It went to, first of all, it went to 99.83 on the 29th. The high is 100.51 earlier on that was made last year in December. And then you came down to 95.24. So had a real nice bounce. Now we're back underneath that 50% level. Going to watch the dollar real closely here. Now this is what I'm looking at. Within the context of what I'm anticipating, I think we've done most of the indices that I want to look at here. Just one quick thing with the TLT, just to show it. See, the TLT is making that arch formation. I wouldn't be surprised if it wants to pull back a little bit more, but it's really interesting because all the TLT has to do is break above yesterday's high of 130.99. And that weekly chart starts to say, hey, wait a minute, you forgot about me. I could still go to a D in the Chapman wave. I've got an overlapping wave already going to peak B. This peak C invariably goes to a D when there's an overlapping wave. So we'll be looking at that EDV question in the den, EDV, and that is the Vanguard, if I remember. Yep, it's the Vanguard extended duration, and this has gone to a D right there in the daily, and it went to a D back in February. Let me just put a down arrow so that we know what we're talking about. At the peak D in the EDV at 133.88 on the 11th of February, it's pulled back to trough C, and just like the bonds, looks like the bond, the TLT, and basically at 124 round number it held. I've made it real clear that 128s in the TLT is really the level of support. I'm going to make it, because you could still go to a D, I'm going to make it the 127s, the entire 127s. So that's going to be really important. And if you're looking at it in the context of bonds itself, bonds at 163 and 6/30 seconds down 24/30 seconds on the continuous contract. Let me move away from this here and show you something that I think is really important. That up channel is absolutely dynamic. You're up above the 9-period moving average of 157.5. You've gone to an alternate count, perhaps of F, perhaps of B. I can't really make the decision just yet because it's a monthly chart. I really need to wait for the end of the month. But at this particular point, it's in the middle of the channel. If you want to do the opposite and go to the TYX.X, that is the yield. The yield has gone to a B. It's making a cup formation. And that cup formation says there's a chance that it wants to test the 2260. Oh, of course, this is 2266, 2226 low that was made in January of last year. And if that's the case, then yields will come down, bonds will go higher. This is really, you can see why I'm talking about the next couple of weeks as being really important. And then April, once we've defined March in the candles of the monthly chart of bonds, yield, the 30-year yield in this case, crude oil, natural gas, gold, copper, the New York Stock Exchange. Let me just show you the New York Stock Exchange right now, New York Stock Exchange, because if you look at the monthly chart, you'll see that it's holding okay, but it's under the 9-period moving average. The MACD is trying, you can see the histogram, is trying to flatten out. The stochastic is attempting to turn up from 33%. Really important. I can't actually emphasize how important this is. Now, I keep in the back of my mind, whatever I'm told and whatever I hear and whatever stays in my mind, and let me just also mention in that chart that you were looking at of the yield, if there is a successful test without going below that left side low, and in fact starts to rally sharply, that's the consideration that I have to make. And that's why the monthly candle is going to be so important. Now, let me just do two things right now. First of all, I need to say in my opening call, yesterday I mentioned that we had another indicator to say that in the Chapman wave trend gauge, to say that within 2 days the S&P futures could go between 9 and 11, 7 to 9 or 9 to 11 points higher, and that should impact the cash index. But you don't know how long that's going to last for. So I'll talk a little bit about that when we get back. I'll also talk about the trend that we're looking at, and I'll just quickly scan to see what the questions I have in the email and in the den.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. I'm going to talk about this one stock I had a question about. Normally, I try to give it a miss. In fact, we haven't had here at TFNN that I can hear of questions about pink slip stocks for a long time. Every once in a while, we get it. And I tell you the truth, a stock is a stock, a chart is a chart. I don't mind analyzing it because sometimes you can make really good money, but you've got to treat it like a lottery. And what I mean by is a pink slip stock, this is a stock that trades at 0.2489. It's up 0.239, up 10.62%. It's had a move that went just recently in February the 2nd. It was trading at 0.042. Wow, it had a little bit of a rally. It went to 0.38. I mean, that is huge, right, in percentage terms. But now it's trading at 0.24. And the question is, hi, Basil, check out PVAH. Is that an ABC setup? Now, I normally would say a stock like this, they're just certain people can do this because they've done it before. They have really good experience, and maybe they've lost, maybe they've gained, but mostly they've gained. So they do keep coming back to these stocks. I, for a long time, have stayed away from the stocks that I don't understand because there's no story. I have no idea. It's Penn Virginia Core, PVAH. And I'm looking at the chart, and there's a certain rhythm. I'm former musician, professional musician. I love to look at the rhythm of stocks. Former artist. I'm a visual person. So I look at the rhythm, and this one in the monthly chart, this is a stock that once was a viable entity. It was trading in the 70 area. No. What am I talking about? It was trading at 81, round number 81 back in July of 2008. Had a little bit of a slip, and it went down to, what did we say it was? 0.024 or something like that, right? Yeah, 0.042. Wow, it's double what I thought it was, 0.042. So here's the thing. It's at a huge move, but the characteristic of this stock, if you look at monthly, weekly, daily, is to have a big spike. Maybe it could go to a B. It often goes to a peak A and then a B, or it's single A up. Well, this has the characteristic of the same move of the others. And I'm just going to say to you, if you want my opinion, Razor, I'm going to say it is way too difficult. If you want to just throw a little speculative money at it because you've had some success before, you've just noticed it, those are two different things. If you've followed it and you've missed the move up, the only way you could see a move is if by the end of the day, maximum tomorrow, without breaking 0.20, it's at 0.23 right now. If it's able to close at the high of the day, there's a chance you got one more spike, and that spike would be not an A to B equals C to D, but it could go to a leg C if that was what you're asking, and that leg C could come at 0.3801, just a penny above that peak B. I would stay away from this. I don't. If it was holding at 0.28 to 0.30, I'd say, aha, nice action. I don't see it right now. I think that the way it's come back and the way it's sitting makes it, yes, it could move up. It's too speculative for me. I'm going to avoid it. I'm just going to say to you, I can't really give you advice. The only thing I could say is if you want to throw some speculative money at it, because it has a history of, if it doesn't, by tomorrow, if it hasn't moved up sharply, then that could be it, because that's the way the character of this thing works. It's speed. It's a rocket ship moved to the upside, and then it's done for weeks and weeks or months even. So I'm just going to say, if you want to throw some money at it, it's up to you. I would not do it. Maybe I'd test at 0.22, 0.21. I'd get a little bit. If it does start to move, I'd have to give it a little room. But if it gets to 0.267 to 2704, somewhere around there, you can add just a tiny little bit. This is purely speculative money. It's not like an option, because when this thing goes, it could go down to 0.05 and just sit there for months. So it has a different characteristic that I would like. In other words, it could be terminal, it could be a long time, or it could just have another move up. The moves are getting a little bit quicker in the daily, but the weekly chart says, hey, sometimes it makes a move and it doesn't do it again for months. So that's the only way I'd look at it. I hope I helped you. Personally, I would just stay away right now. It's done its move. I don't like it. But if you think it has a little bit more room, that's the only way I'd see it. That's number one. Number two is looking at these stocks. These are what we call pink slip stock. I'm not sure it's a pink slip. It looks like a pink slip stock because it's trading with 4 digits after the 0 point something. I like it when you're following something, you followed it for years, and it suddenly had to move, and you say, oh, I forgot about that. Then you look at it again because you've already got a feel for it. It's like I love to visit a city for a couple of hours, even if I'm on my way somewhere, if I'm stopping. I want to have a quick look around, because if I ever come back, I already know the lay of the land. It's different to a map. You just get a real feel for it. This is the same thing. I'm staying away. I don't want to give you a recommendation other than what I just said before. If you do see it move higher, maybe you want to just touch it a little bit. And how much are you going to make? If you want to put thousands into it, thousands of dollars, thousands of shares, not for me. No, I'm out. So let's go on. We've got Scott in Safety Harbor. Scott, how are you?
Did someone say thousands of shares?
Yeah, someone did say thousands of shares.
Let's take a look at CX. I agree with you entirely as far as people that ask me, they say, I'd like to buy, I can afford to buy 10 shares of Gilead. It's that's, $1,100 or whatever. And I just tell them, really, it's not for you. If you want to get into a CX at $4 or something, it's a little bit different. But you understand what I'm saying? The risk reward is not. What are you going to make? Maybe.
Well, there are a couple of things, Scott. So first of all, I've found over the years that to arbitrarily say something, it's all very well to say it, and actually it's even worse if you say it and you're right, because you might not see that person again for a little while,
right? And
then they're stuck in a position. And it could go all the way against them after being right. And then when they see you the next time and say, I'm still holding, you say, holding what? And they'll say, you said Apple's going up.
Oh,
and then,
boy, did you hit the nail right on the head, Basil.
Yeah,
you
say,
sure
wait
did.
a minute. That was in the summertime, and it's wintertime now.
Yeah.
For a long time, I've been avoiding that. Let me just go to, you're looking at CX right now. Is that correct?
Yeah, it's not even an hour-by-hour market now. It's a second-by-second. And you're because I've had that happen to me. Way down the road, someone's like, "Yeah, I finally got into Microsoft."
Microsoft? 1,000 trades ago. I don't even remember Microsoft. Okay, so let's look at our CX here, because this is very interesting. Because what we've got, folks, we've got CMAX SA as a cement company trading at 6.13, up 23 cents. It's getting a little toppy. And now what's really happening here, and this is going to be such an important moment. I'll tell you what, the weekly chart is in leg B. The technicals are finally confirming that this is a move. If CX is able on a weekly basis, and I know you might be talking hours, I just want to do this on a weekly basis to say, excuse me, 6.40 was the high of the week of the 4th of December. If CX is able to close, sometimes I say it just has to hit it. It doesn't have to close. Right. Other times I say it's really important that not only does it hit it, it has to close. So hold on, Scott. I want to talk about this. I'm going to also just jump over to some of the other low price ones that are in the steel area, and I'll be right back with Scott. Dow's up 62, S&P is up 10, and I haven't even finished talking about our positions. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Dow's up 73, S&P's up 11, and a couple of things are important. In my outlook yesterday, and I can't even remember, I wrote it so many times, I don't remember if I wrote it in my newsletter, but I said I would like very much to have an early rally with the futures giving us a Chapman wave trend gauge move to the upside, and then a pullback because that pullback would be really important to scare the daylights out of everyone, and then a move up into the close into maybe Thursday morning until we hear about what Draghi's doing and all that stuff. So far, the scenario is really good. Let's go back to Scott. Scott, so I'm looking at CX. I think it's getting close to stalling a little bit here. I've got a peak F in my 120-minute chart from yesterday at 6.30. But I have an alternate count that says maybe it's an F, but it could even be a B in the daily. But the 9-period moving average is at 586. The MACD is still good. The stochastic has pulled back, but it's still strong at 88%. But I have one indicator which is saying that the upside, just maybe even for a few days, could start to bump into resistance, and that resistance is somewhere between 623-ish. The high today is 619, so it's somewhere between 623-ish. I think it even gets to 623. There's a good chance it'll break above 630. But then I think you've got to be a little bit more careful just for a couple of days, because it does need a little bit of a breather. And I'm not saying there's anything wrong.
No,
I'm just
I agree
saying,
with you. I call it natural selection, and that means is there's just all the charting aside, all the news aside, there's just a natural thing that people have as traders, which is if something moves that much, that quick, they just naturally are scared of it.
well,
two
things happen. You get your latecomers. The latecomers are the ones that I can see coming in over the last couple of days.
Right.
And at the same time, stocks need, just like people, they need to breathe. And it just needs a little breathing room. And that's all I'm saying.
I was really hoping, for a lot of reasons, it would pull back into the 560 range yesterday and this morning. Just like you're saying, just take that inhale a little bit.
That's exactly right.
Before we let that back out to the 625, and then
so I'd be a little careful if you've got a profit. Right, if you've got a profit in this area right now, start taking something off. If you're still in it, and if it does move up, it moves up. But you know what? This is where the risk reward is just that little bit. I got an edge to it that says shorter term, it just needs a breather. Hope that helps you.
This is the gambling side of me, because the truth is, after as well as I've done in the last 2 months, right now I should be on vacation, because you and I
said
both
it.
know.
Hey, Scott, I'm not going to let you say another word. You just said it, and you need to listen to yourself. That's really good thinking. Listen to yourself. Speak to you soon.
And you know as well as I do, these crystal blue skies we've got can turn into a thunderstorm very quickly.
Exactly right.
All
so
looks
just be
rosy
careful.
right now, folks, but it'll change, believe me.
Okay. Scott, thanks for calling. Good luck with the trade.
Bye-bye.
Thank you. Let's go to Anna in New York. Anna, how are you?
Good, Basil. How are you?
I'm well, thank you. So we had last looked at, if I remember correctly, we looked at Apple.
Yes.
Yeah, and I didn't think there was all that much room. And in fact, it did chop around for a little bit, and then suddenly it took off, and it took out the 98.89 level on the 18th of February. It did that on, let's see, that was on the 1st of March, and it's gone to a leg C, and it looks as if leg C should go to a leg D if the general market is going to keep moving up. I'm still not, you had a position, right?
Yeah, my entry is around 98.
Yes. Okay. So now this is what I'm going to. Now, there are two things. This is a position, if I remember correctly, the way you had phrased the question was that you were looking for something that had more of you didn't really want the short term. You were really looking for more intermediate term. The question was like, is Apple now going to have a pretty decent rally, get back to the 105, 110 area? I think that's kind of how the question was, right?
Correct.
Okay. So this is what I'm going to recommend to you. I don't want you to get out of your trade because you got in at a nice price, 98, in that area, 97, 98. That's a nice price because you've got about a 3-point cushion. The next couple of days are going to be really important. We've got Draghi tomorrow. I don't know. One person doesn't change a trend. And so far, the trend is retracement to the upside to get back a chunk of the losses that were made. So I'm treating it as if there's a little bit more room to go on the upside, and then we got to start assessing how much is left. So the way I'm looking at it right now, if the market is going to go higher, actually, it's two things. Apple will be a clue, because if Apple at 101.30 is able to get to 102.50 by, let's say tomorrow, whatever the news is, tomorrow, if Apple's at 102.50 instead of being down at 99.70, in other words, it's not down about 60 cents from here. Instead, it's up 60 cents or more tomorrow. Then there's a really good chance that both Apple and the market and the NASDAQ are going to go higher, and Apple will go above the 103.75 level. That was the high of the 4th. So I really don't want to change your position. I just want to give you a heads up to say, as I'm looking at the monthly chart, let me move away from this. The monthly chart, as I'm looking at the weekly chart, Apple is really struggling. It's actually not one of my favorite stocks, although on a percentage basis, going from the low recently of 92 to 101, that's a very nice percentage gain. But at the same time, if you look at the damage that's done, as it's come down sharply, then it made this arch formation and retested, and it's held the 200-period moving average at about 93. It looks like it's tired. It looks like it needs more time it looks like it needs about another 3 to 5 months to rebuild to become a really strong stock again. So I'm just going to say to you, you got in at a nice position. I'm going to recommend you don't have to implement what I'm saying. I'm just saying that I would say to you that if Apple comes back to 90 to 100, if Apple breaks 100 support on a close on any day in the next 3-4 days, I would take a little bit off. Mm-hmm. And it means that if it goes back again, you don't have your full position. But the reason why I say take a little bit off is because it's starting to, if it closes under 100, it's starting to break the 9-period moving average support. And every time it's done that, it's started to jump around. It didn't go very far. So that's the only thing I'm going to say. But stay in the position, let the market, I think the market's going to go higher, and I think Apple should do it. And I can only tell you this, that if Apple suddenly, on any one day, if Apple moves 2 points or more, it should really help the general market. That's the way I'm looking at this, because I can see the relationship right now that Apple has kind of been dragged up by the market. So if Apple can suddenly lead, that's going to be really important. And then my target would be, call me again if you're still in the stock and it's hitting 104.50, and then we'll reassess it again. But I think right now you're in a good position. I don't want to be the one that makes you change your position that you did yourself very nicely. But I'm just saying, if it does pull back and closes in the 99s, 99.70 or something like that, I definitely would take a little bit off, and I say, you know what? I can always come back again. You could even add it back a point later or two if it shows that it's got strength and the general market's moving higher. I hope that helps you.
Okay, thanks, Basil.
Thank you very much for calling. That was Apple, folks. We're looking at trading at 101.33, up 30 cents. Dow's up 64, S&P's up 10. Nice comeback. I'll be back straight after this, and we'll talk a little bit more about the markets, and I'll check out some of the questions that I have.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Let me just I had a lot of questions lately regarding the crude oil. Crude oil has made a leg D. This could be a peak D, but if it just goes a little higher above 38.39, the continuous contract, that extends leg D. Coming off a bottom, remember, Ds are not nearly as important as when you're going to tops, or if you've already had one buy mode that went to a D and now you're in the second one. So the first one, when you're coming off a major bottom, you're going to make Ds no matter what happens if you keep rallying, because each higher peak is labeled, and you've not been even to a D before, so you get to a D and you recycle and you go higher. So that's where I'm not that concerned when you make a D when the technicals are just beginning to strengthen off a low, when I see other configurations that are confirming that this low could be one of substance. And we are, for my subscribers, we have gone into this area, the whole commodity area, in many ways. Boy, before I say that, let me just double check here. Oh, great. Okay. So we've done that, and we've done it through an ETN. We've done it through individual ETNs and things like that. We've got one that's up about 8% right now. I just got in yesterday. Got another one that's up very sharply, a stock that's in that area. So it's an experiment. I'm doing it with the subscribers. We've not been as strong into the commodities for years. I mean, we've gone in and out, but really nothing like this. So I like what I'm seeing. If I go to the USO, which we bought at $9.16, got stopped out for a tiny loss, and then what happened? 11-cent loss. It was a little too tight, and now it's trading at 10.07. Doesn't matter. We've got back into other areas which are doing even better. So that's it. That USO is acting very well. First time it's taken out the left side peak ace. Not done that before in 2016. The last time it did it, it went from September of 2015 at 16.15, pulls back, and then it goes slightly higher to 16.20 in October, the week of the 9th, and then plunges, and that was it. But this time the technicals are quite a bit different. So I think that this is a little different. And I've not said that before until this last week or so, that I think I'm looking at something that's really much more positive. Next question was the 2-year note. So yes, crude oil, I like it. And I think the risk now is if you buy now at 10.08, let's say the USO, and it's in C, and it's a C1, C2, it's going to pull back. The stochastics at 92%, the MACD is good. It's only time, if it pulls back, it'll retest whatever entry point you get in at now. Will it go much higher into the 11 or 12 area? We have to wait for the weekly chart. My guess is it's going to do that. That's just a guess. Let's see how the weekly chart closes. That's going into Friday at 4 o'clock, okay? But in the meantime, it's looking quite good. Next question I had was the T-note selling off. You know what? The T-note TU is this. Finally, I found it out, figured it out over the weekend. 2-year U.S. Treasury notes continuous contract made a peak D in the monthly chart. In the weekly chart was an alternate count E, not an A, but an E, rogue wave basically. It just spirals to the upside in a single leg and comes down in a single leg. That's that Eiffel Tower look, and you can see it much better in the daily. So this is something I'm going to watch, and that says to me, keep your eye on bonds, because if there's one more economic report that's positive, the Fed is kind of obligated to talk about maybe raising another 0.25%. I don't know what that'll do to the market. So there are a bunch of things that are going on. But internally, I featured a stock today. We have no position now. We took some profit when we were short this particular stock. And now it's down again today. CTAS, which is Cintas, but look how it's holding in the monthly chart. To me, that's a bit of a clue as to the economy, because they make overalls and clothing rentals. Orly's another one. We have no position in this right now. Down a little bit today, 263, but holding in a high-level consolidation. These are the types of stocks that are going to tell me within about a week or two more about the economy, more about the stock market, and more about the elections than many other things. So I'm looking at it, keeping an eye on them very closely. Bob wanted to know about XOP. XOP is XOP. That's the oil something. That's the spider oil and gas exploration. It said it plunged yesterday. What's going on? I think it's going to make a leg D. It's trading at 28.84, up $1.20. You're absolutely right. It went to a peak C on the 7th to 30.24. Yesterday, it pulled back to 27.53. Your comment was it crashed. Well, that's really not a crash. I know what you mean. If you were looking at some shorter time, 120-minute charts, sure, it looked like a crash. But you can't really put that into crash category. Look at the upside. That's a rocket ship to the upside. So this is just a normal correction. Yes, it's been volatile. That's fine. I think from the weekly chart that if today's Wednesday, Wednesday, yeah. So if Wednesday, today there's a close anywhere up in this area, 28.76, let's say, to a higher close towards the high of the day, 28.90s. Wow, it would be great if it is 29.03. 29.03 would be great. If it does that, I'm going to say to you, Bob, the XOP should go to a leg D. There's no reason why it shouldn't right now. The stochastic and MACD are all very good, held way above the 9-period exponential moving average of 27.48. I do like it, but because it's had this kind of a move, it means that if you get in, you really have to go. You got to have a smaller position than if you were buying it in the 26s. That's all. So yes, but don't get a full position. This is a starter position. Why? Because we don't know enough about it. Yes, it has the same look as the other charts in a way, but its volatility in coming, as you said, going from 22, I mean, this is incredible, 22.06, and just less than a week, it goes to 28.53. That's 6 points. That's what is it, 20%. And then it pulls back. Bam, twice it goes down to the 23.01 level, and then it spirals higher towards 30.24. Volatility, absolutely, and this represents it. But you know what? I would get a position, and I'd say, you know what? I'd like it to pull back to 27.53 to 20, somewhere in that area to 26.80 to be able to see if I want to buy a bigger position, because it's going to go much higher, but at least get a starter position here. Hope that helped you. Okay, a couple other questions. Let me quickly look at the DEN. There was another question earlier on. I think just about the VIX. The VIX index, let me just show you something. I didn't do that. I always mean to do this right at the very beginning, and then I completely forgot. This is the ESH16. This is the current contract. You see that sharp sell-off? I'm not sure what caused it. It was way after the oil. I don't know what did it. But anyway, look, it plunges. I love that sort of thing if it can come back. I don't like it if it fails, and especially after an open like we had. That just scares the daylights anyway. Daylights. And now you've got people that are saying, the price I really wanted for the E-minis was somewhere in the 1970, 80, and they waited and they got it, and now they're looking good. These are fresh buyers, I suspect. So that makes it very important for the E-mini to break and close above 1991, the high it was made. I still suspect that by the end of the day, however nicely we rally, there'll be some weakness because people are going to say, I don't know if I want to be sitting here when the E-minis pull back 20 points when Draghi says the wrong thing tomorrow. So that just says to me, be a little bit careful. But that's what I'd like to see. As far as the VIX is concerned, at 1853, I really would like it now under 18. I'm not happy that it's holding well here. And that's saying to me, yes, might be a holding pattern, even if there's further gains today because of tomorrow. So that makes tomorrow's close very important. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's up 62, S&P's up 11.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're back. The last segment, and let's just do this quickly. NXRT, I was asked about. This is a holding, next point, Residential Trust Inc. Holding okay. It's made a peak D. It should be acting better, getting towards the 200 period moving average, that pink line at 1284. So I said at 1220 on this 9th day of whatever it is, March, trading at 1220 at 11:52 a.m. Holding okay, but has a history of failing. If long, that should be if long, put the L in right there. If long, use a stop on some at 1190. Needs to hit 1260s by next Tuesday or Wednesday without sliding below 1190s first. Weekly is struggling to hold above the 9 EMA. It really needs to establish that it can close above last week's high of 1269 to be able to establish that the MACD is crossing positive. Stochastic can go from 48% to 52%, and that it breaks a trend line, just a visual trend line. Do it real easy. Look, plop, you just do that. And you say, okay, I use these trend lines only as guides. I don't make it a big deal that it's gone above and now it's broken out. No, it needs to go above because time alone will make it go above. But I need to see it close above, and then I want to see a reverse so that I can finally put the V-shaped pattern in to say it's climbing towards the 1280 level of the daily 200-period moving average, and then 1380. But this is the area that should be working right now in the residential trust area. So we'll see. Okay, now let's do a couple of things here because we're going to run out of time. I don't really want to do that. I want to just show you a couple of things. You see this pattern here in the Dow, INDU. We've gone to a D and we're holding real well. I've made a big deal about this 200-period exponential moving average in the daily chart. Why? Because when we broke down on the 4th of January, we did not even come close to it, but now we formed the pattern. Let me show you in my show my subscribers to my opening call. Please check out my opening call. This is just a perfect time for it. Why? Because this is we've had some real nice entry points, nice trades, and it's really for people in all different categories, price categories. I can do something for $300. I can do something for 35 cents. I can do something as we did yesterday for 0.77 and it's trading today at 0.85. So it's all over the show. You'll be able to pick what you like. I've got dividend stock, etc. So this is a nice time. But you see this 200-period moving average? And the reason why it's a good time now is because I think that in 2 weeks' time, it's going to be really tough to know what to do because of the market, where the market is, and because of April coming up. So that's what I wanted to say. So you can garner profits now. It'll be very good because you can build up a little kitty because we want to have some flexibility in changing direction if we need to. Right now, we're still long the Dow. So here we are, 200-period moving average. See that? It's like a magnet, but you can't break away from it for 1, 2, 3, 4 sessions. We've just been hanging around that line. That's really important. Why? Because the moment that the Dow gets to 17,163, it's at 17,046 now, or above, you've broken away. You've treated this 200-period moving average now as a tested base of support. All of a sudden, you're looking at something different. And the MACD is still good. The stochastics at 94%. These are nice conditions, but you do want price action as well. So it'll be great if intraday we can go down 100 points. Undermine then if we close only up 60 points because you're waiting for tomorrow. And I like that because it gives us a 60-point cushion for tomorrow if there's a sudden dip. So this is a really important moment. How does the market handle any bad news tomorrow if, in fact, Draghi does something disappointing? Number one. Number two is the way the actual market is holding up right now tells me that there's enough internal and residual strength to sustain a sharp pullback, as we saw yesterday, to try to recover, at least for another week. I think there's enough energy for at least going into next week, Wednesday or so. So thank you for being here. I appreciate it. We all appreciate it here at TFNN for you listening to us hosts. And have a wonderful day. Be back tomorrow. Check out my opening call. I think you'll find it very interesting. Be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,